What is up, YouTube? Welcome back to Stocks by the Numbers, and I wanted to hit you guys with another material company here that I was looking at, as I mentioned in the last video, LPX, the lumber company. I'm taking a look at U.S. Steel here, ticker symbol X. Right now, the stock's trading a little below $20 a share. This is a 5-year chart, and you can see back mid-Trump, stock was north of $43 a share. But then again, COVID, hyperinflation, lack of supply, increased demand, stock rose and almost hit $40 again. It's sitting here at half that. And I just wanted to look at a few of the numbers here. We got a market cap of $5 billion. The beta is a little high, which is why this is so volatile. But I mean, look at this PE, little north of 1. Earning $17 a share. You look at companies like LPX and you look at companies like U.S. Steel, and really, unless there's going to be a ban on these type of materials, you can't tell me that long term these are not phenomenal investments. I mean, both of these companies, LPX and US Steel, they're also paying a dividend. I mean, we're looking at phenomenal long-term growth. We switch over here, Trading View. You're seeing a nice beat. Look, $5 billion for the quarter. Another beat here, almost $6 billion for the quarter. Slight miss here on the EPS side. Look, still over $5.5 billion for the quarter and $5.25 billion for the quarter. So they're making $5 billion a quarter, and the market cap is $5 billion. So this basically, if you recall the most recent videos, this is basically Goodyear Tire all over again. You're seeing these EPSs here. Here's that one miss, and these are annual. You can see the jump we had in 2021 brought in over $20 billion in revenue, earning roughly 25% income off of that $20 billion. Definitely nothing to sneeze at. And the market cap right now is $5 billion. I mean, again, we're seeing a slight decrease because remember, the initial demand got in with all these material companies, the LPXs, the US Steels, even the Alcoas. Maybe I'll do a video on Alcoa, aluminum company. But again, I mean, these numbers, I'm looking at some good numbers here on a lot of these material companies, and long term, I really do think that it's gonna benefit you guys long term, in my opinion, if you step in here at these levels and hold for the next couple of years. I mean, look at this jump. We're up to 21 billion now for the year for this company when they used to do 9, 12, 14. I mean, that's insane. The cost of revenue has gone up roughly 50%, which definitely raises a red flag. But look at the profit that they've been taking. Just absolutely disgusting with the jump. I mean, phenomenal numbers here. Expenses went up a little bit. Look at the operating income now they have on hand. I mean, everywhere I look at it, I'm liking this company. I am liking this company. I personally made money on this under Trump because I knew Trump was, talking about all American companies and whatnot. So I knew, the U.S. Steel and, like I mentioned, LPX, these domestic lumber companies, these material companies. I mean, these were all big winners over the last couple of years. Recently it's gotten a little volatile and a little rocky, but again, that's because the overall market's having some serious pullbacks. People are digesting these inflation numbers and unemployment numbers and whatnot. So Fed minutes and Fed rates. So, at the drop of a hat, everything can change on a dime. I definitely don't need to tell you guys that, but, looking at a company like this overall long term, again, this is something that, in my opinion, this is worth getting in and holding for a couple of years. You can see it's made a little bit of a kind of like a support here at around $20 a share, which is basically where it is now. I don't think we're going to see this gap fill back down to 16, 17. If you do, in my opinion, I'm a buyer, but technically it shouldn't go there, and it's not justified. If we look at a max chart, I mean, look at this. Back in 2008 was almost $200 a share. So, on one announcement, if Biden decides to get a project going with steel or something, this is only going to be good long term. Short term, again, we have a beta north of 2, so it's going to be more volatile than the stocks to the left and the right of it. So again, like I always say, if you're looking for a short term answer, if you're a trader and you want to know where this is going to go next week or next month, honestly, I can't tell you. Long term, though, in my opinion, this is a $100 stock. This is a $100 stock. Just like I mentioned with GT, we have quarterly revenue matching the market cap of the company. Now, again, they might have, some debt on their balance sheet, that they're paying down and everything like that. But at the end of the day, you can't just tell me that certain companies receive, huge bumps in share price and certain ones do not. Because when you least expect it, when you're not paying attention, that's when the stocks are going to explode. And you're going to look at a chart, you're going to look at a video like this, and you're going to say, wow, 12, 15, 19 months ago, this stock was $18, $19, $21 a share, and now we're sitting here at, $45, $47, $51 a share. Again, the materials worked out very well under Trump. Alcoa was a great win for me. I played it along with US Steel and LPX. And Alcoa, I remember, I think I got in at like $20 and change, and they took the stock north of like $60 or $70. And, again, reason being hyperinflation. They have to charge more for these materials, but people need these materials. We need steel to make pretty much most of the structures that we do, any bridges or anything like that. And, these are the companies that see bumps off these little announcements. If they're going to, upgrade a bridge or build a bridge or repair a bridge or something like that, you need these materials. We need lumber. We need steel. We need aluminum. There was a massive aluminum shortage. And you even had companies like Coca-Cola coming out saying, that it's costing a little bit more for them to make aluminum and they can't get their hands on aluminum, but people didn't necessarily want to import aluminum from places like China. So, these are companies, I think, in my opinion, long term, that you're really going to want to keep an eye on. And now there's a lot of turmoil happening overseas in, Eastern Europe and everything like that with Ukraine and Russia. And, I don't want to put it out there, these negatives out into the universe, but just in case, if we do happen to get pulled into a war, materials become astronomically expensive and extremely more scarce. I still remember stories of people during the Great Depression and, World War I and even World War II, going into World War II. There were people, you talk to, some of these older Americans, and they would, tell you stories how growing up, they could only have butter like once a week or twice a week, because of the rations and the scarcity because of the war. Or people saying that they couldn't get a new pair of shoes because the rubber and the materials needed to be used for the war and for the soldiers and for the machines, so it was sent overseas to help wage the wars against our enemies, as opposed to being here and making us sneakers and door stops or whatever the hell we would use it for. So, no one ever wants to talk about the negatives. But when the negatives do happen, and the shit does hit the fan, so to speak, these are the type of companies that benefit. Again, no one saw COVID coming, right? But here, look, March of 2020, $6. $6. And I was 110% a buyer here at this level because I knew prices were going up. I knew they were going to need more steel to do whatever the hell they were doing. Whatever the hell they want to use it for, it doesn't matter. Same thing with LPX, same thing with Alcoa. You saw all of these companies move 2, 3, 500% in some cases over the course of the following 12 to 24 months. And there's a list of reasons why, as I laid out before. So, again, my short-term traders, I don't know what to tell you. It's got a beta of 2, which means it's twice as volatile as the market. And, you have a day like today, look at the top here, we're up, 700 points, 100 points on the S&P, and US Steel is down 1%. So nothing is guaranteed, nothing is set in stone, as we all know. Stocks can either go up or they can go down for whatever reasons they decide to on that day. But long term, in my opinion, this is minimum, I want to say, north of a $50 stock. And that's being conservative. And we already did hit these numbers back, 4 years ago, and even a couple of months ago, this was up at 40. So, is it volatile? Long term over time, it does bounce up and down, because remember, a lot of it has to do with, our government and what our president wants to do. If the president decides, he says he wants to use American companies, American steel companies to build something or fix something, it's going to be companies like this that reap the rewards. And, it was doing very well under Trump. But again, long term, not only do the numbers support long-term growth, but again, but I want to bite my tongue, but if for any reason we do get sucked into a war or there's any type of turmoil overseas in Europe that affects our economy in an even greater way than it already has, it's going to be companies like this that benefit, because people are still going to need their materials, regardless of the prices, just like we saw with LPX, Weyerhaeuser, Alcoa, and US Steel. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Keep an eye on this one, US Steel, for all my long-term investors out there. Definitely a buy here at these levels, in my opinion. And thanks for stopping by. If you like the video, give it a thumbs up. If you like the content I'm putting out, subscribe to the channel. If you don't like the content I'm putting out, drop it down in the comments section. Rip me apart. Let me know what I could do differently. But again, moving forward, I wish everyone success. I hope everyone makes a couple of dollars in this market. And thanks for stopping by.